We are going to talk about energy. Oil prices above $90 a barrel. That's up about 36% in a week. Gas prices, $3.45 a gallon. That is up about 45 cents in a week.
Daniel Yergin, writing in the Financial Times on Friday of this week in an opinion piece titled, "Is the Nightmare Scenario for Global Energy Here?" I'll read a little bit from it. Current oil prices in the 90s are far from the worst case scenario, but right now, the world is looking at the biggest disruption in oil production in history, as well as a resounding shock to global gas markets. The key question for global energy, he writes, is the duration of this explosive war. Dan Yergin, the Pulitzer Prize-winning author of The Prize, The Epic Quest for Oil, Money, and Power, author of the new map, Energy, Climate, and the Clash of Nations, joins us now here on set in New York. He's the vice chairman of S&P Global. Dan, great to have you with us on this Sunday.
Thank you so much. Although we did say in the break, you are dressed a little better than us here on the weekend. Just a lovely tie.
Overdressed.
We'll correct it next time.
Yeah.
I want to start with just a broad question about the gravity of this moment. You get to it in that piece in the FT. How do you look at this in the broad sweep of history, the moment that we're in right now, and the potential for this being a conflict that doesn't last a matter of days or weeks, as the president initially said, but indeed drags on longer than that?
Well, it is, at least it points to the possibility of the nightmare scenario that has really been there for half a century, ever since Iran erupted in revolution and set off an oil shock at the end of the 1970s. So, but this is, at the scale that we're seeing now, there's nothing comparable to it.
And what does that mean? When you say the nightmare scenario, tease that out for us, and what should we be expecting or fearing, I guess?
A nightmare scenario would be a war that goes on a long time, a disruption that goes on a long time, prices really skyrocketing, and 90 is high, but it's not skyrocketing, with major impacts on financial markets, and ultimately the world economy plummeting into a recession. That is more or less this nightmare scenario. That's not where we are, and this would have to go on longer, and also have to see considerable damage of the infrastructure in the region.
Which concerns you more when it comes to possible Iranian outcomes? A more conservative regime that is less likely to collaborate or cooperate with, other world's economic indicators, or a total power vacuum? And can you talk about what the difference would be to the global oil markets and production?
Well, it's hard to imagine a totally chaotic Iran.
Yeah.
Nobody's in control, and there are ethnic divisions in the country that would tie it apart. But I think there is a question of imagining what kind of organization would rule the country other than what it has today, and would it give up? Would it give up its revolutionary zeal, its antagonism to the West, its effort to dominate its region, and go back to being what might be called a normal country? And a country that's focused on economic growth and development and doesn't running short of water as it is right now.
Right.
When you look at the news overnight that the UAE is cutting back production, Kuwait's cutting back production, we see the changes that Saudi Arabia is making, shifting more of its oil through pipelines and not through the Strait of Hormuz. What does that tell you, the way that these countries are reacting to this, about the trajectory of it going forward?
In a way, if you may not remember during COVID, when all the storage was filled up because the market demand plummeted, people didn't know what to do with oil. And in fact,
you're trading in the negative, right?
Yeah. Oil prices went negative. That's kind of it's not a full analogy, but that's where they are right now. They can't put this. You have a very complicated, integrated system that goes from pumping oil, processing it, getting into tankers, shipping it to markets, and that system isn't working now. It's bottled up, and so that there's no place to put the oil, and you run out of. Basically, the countries are running out of storage, and the only thing to do then is cut back production.
I also want to ask you about that bottled up and the bottleneck in the Strait of Hormuz. We've got some sound from the president we want to play you.
What about the Strait of Hormuz? There's no traffic really going through it.
Well, that's, the ship's choices, but we haven't cleaned out. We've wiped out their Navy. The Navy is now at the bottom of the sea. So that's the choice. This is an excursion. We figured oil prices would go up, which they will. They'll also come down. They'll come down very fast, and we will have gotten rid of a major cancer on the face of the earth.
The president has been trying to encourage the shipping to continue, saying the U.S. will help ensure. The U.S. could even escort some armadas of ships as they go through. Is that realistic? And if you were a producer, would you take that risk with your assets?
I think it is a very big risk. Obviously, people still have insurance, but it's now war rates, so it's gone way up. And of course, the administration has said that they will insure ships if they can't get commercial insurance. But the risk is that a lot of the Iranian Navy has been destroyed. But there's still drones, and there's still explosive speedboats that can...
Those fast boats, yeah.
That would put a tanker at risk. And so you have to be very bold. And at least as I understand, the escorts, they're not ready to do that yet because the naval ships are focused on the war and protecting U.S. battleships. I mean, we did have in 1987, the U.S. provided escorts to Kuwaiti tankers, but there weren't any drones then.
I look back on the last week, and there was that moment when the Treasury Secretary went on a rival network. He was on CNBC, and he floated the possibility of the administration doing more. And investors responded positively to that, as vague as the comment was.
Did he define more?
Did he define more? No. There is a generalized lack of definition, I think, on many fronts here. But that gets to my question, which is, Christina asks about there being kind of escorts, naval escorts, perhaps additional insurance that's backed up or provided by the U.S. government. When you look at kind of the panoply of policy options that could be presented by this administration, what would make the most difference to industry at this point in time?
Yeah, what would actually help?
Such overarching uncertainty. What would actually help?
Well, what would be the end of the attacks? I mean, that would be it. It's very simple, and we know that that the air war is aimed at the missile launchers, trying to knock them out one by one. They open up and get them. They're in these missile cities that Iran has. So I think it's trying to get Iran to a position where it simply is toothless. That's the objective, and the president has talked about unconditional surrender. Not sure what that means.
Another lack of definition there as well.
Yeah, and remember, Iran. It's a divided leadership, and as well as a decimated leadership.
We're waiting this morning to see if they have chosen a new leader, but unclear. It won't be the same power center that Khomeini had.
No, he had been at it for a long time.
I'm curious how you see the price, where you see the price going from here. So it's been an incredibly fast move, as you point out in your piece, as we've seen over the course of the week. And we were talking about the prospects of a $100 barrel last weekend. Where do you see the price going from here? And I think there's a question a lot of people have on their minds, which is what is the lag between that happening and we seeing even more manifest at the pump, higher gas prices?
Well, I think that, there are all sorts of predictions out there. You hear people saying, it's over 100 or 150. I mean, I think these are notional ideas that clearly all the pressures are for the price to go up. You have lost 20% of world oil. You've lost 20% of LNG. And as a result of that, markets, you're going to get people bidding for supplies. We see tankers that were going to carry LNG to Europe now being diverted to Asia. So, everything points to higher prices. Where the limit is really depends upon event. And why I say that what's the most important thing is duration. Does this go on a week? Does this go on a month? And that has different consequences.
As you look at this conflict and the economic story part of this, as we talk about it, as we've all talked about it, what are people missing? What is the most important thing that you think people are overlooking in this conflict and how it's impacting the economies?
Well, to me, one thing is that we do have resilience. We're not in the position we would have been a decade or two ago. Because the U.S. is now the world's largest oil producer, that gives a security that we didn't have before. You have production going up elsewhere. You have Canada at 4 million barrels a day. Brazil is 4 million barrels a day, which is 4 times what, by the way, Venezuela is currently producing.
That's interesting.
So there are alternatives, and there are strategic stocks, which were created in the 1970s in response to the threat of a disruption of supply coming from the Gulf. So you have all of those factors at work. You also have an east-west network that can move oil to the Red Sea. So those are things that need to be kept in mind, even as we look at an unprecedented situation.
You bring up those strategic reserves. There's one in the U.S., of course. The president has talked a couple of times about the prospects of drawing that down. What is the calculus the president must use in a moment like this to decide that? So, of course, used by President Biden as the war began in Ukraine. What should the president be thinking about when it comes to whether or not to deploy that oil?
This is a much more serious disruption of oil than the ones that President Biden responded to. We also saw it used at various times on the eve of certain presidential elections when gasoline prices go up. As we know, gasoline prices are the most sensitive prices in the country, particularly sensitive in an election year. So I think that it will be a judgment that you need to send it into the market to reassure the markets. I remember that on the eve of the Gulf War in 1991, they released the strategic reserves, and the price, instead of going up as people thought, went down. So I think I would expect, and it's not only the U.S., but you have all these other IEA countries, and China has built up huge reserves, that those will be used.